Hi, I'm Dan Clifton, Head of Policy Research at Strategas Securities, a Baird company. We're about 2 weeks out from the midterm election, so we thought that this would be a good time to review client questions that we're getting about the midterm elections, what the likely outcome's going to be, what the policy implications would be, and how financial markets could respond to different election results. Thank you for joining us today.
How are you looking at the current political environment?
It's important before we talk about the actual 2022 midterm elections to understand the current political environment that we're operating in. The United States is undergoing its single greatest political volatility since the end of the Civil War in 1865. What do we mean by that? Well, we've had 8 federal elections since the financial crisis in 2008, and the voters of this country have removed the party in power in 7 of those 8 elections. We've had all Republican, we've had all Democrat, we've mixed it up with Republicans and Democrats. We've enrolled the dice with Trump in 2016. And none of these combinations have been able to create some sustainability of one political party. So we start to think ahead to the midterm elections. We're starting to view this election as going to be the 8th election out of the past 9 where political parties change. It's very likely the Republicans are going to win the House of Representatives. This is coming in an environment where inflation just completely dominated the financial markets' attention in 2022, is also the single greatest issue heading into the 2022 midterm elections.
What framework are you using to evaluate the 2022 midterm elections?
Midterm elections have historically been referendums on an incumbent's first 2 years in office. How do we know this? Well, we tend to look at the president's approval rating, and what that president's approval rating is highly correlated to the number of seats gained or lost in a president's first midterm election. And so as a president becomes more unpopular, they tend to lose more House seats. There are only 2 presidents in the last 100 years who have gained seats in their first midterm election. That was FDR during the Great Depression in 1934 and George W. Bush in 2002 after 9/11. Most presidents lose seats for their own political party in their midterm election. And on average, that president loses about 29 seats in their first midterm. Most of this election was shaping up to be an election very similar like the historical pattern. And usually when that process gets set in the middle of the first half of the midterm election year, it usually stays there. But we started to see a more neutral political environment begin to emerge over the course of the summer. The reason for that is that gasoline prices fell from $5 a gallon to $4 a gallon. The Supreme Court ruled on Roe versus Wade, and we saw an increase in voter registration amongst Democratic women, particularly women under the age of 40 years old. You also saw a big uptick in gun control support, and at the same time, the FBI was going after President Trump, keeping President Trump in the headlines. And so we had 5 special elections during the month of August for retiring member of Congress's seat. And in those 5 special elections, the Democrats did pretty well. In fact, you could argue in mid-August, the election was held that day, the Democrats probably could have been close to keeping the House of Representatives. But that has all started to change since Labor Day. And as Labor Day began to proceed, the issues that are most important for voters started to square up with what the Republicans were campaigning on. The 3 most important issues in this election today are gasoline prices, crime, and immigration. And all 3 have been prominently pushed by the Republicans. What we know is that the Republicans usually gain about 3 to 6% in the polling from Labor Day to Election Day. So far, the Republicans have gained somewhere between 3 and 4 points on average between the House and the Senate. And so what you are starting to see is that the undecided voters are beginning to break towards the Republicans, consistent with the historical pattern where you start to see the Republicans, where you start to see the party out of power gain seats, the Republicans gain that 3 to 4 points. Our House tracker right now has the Republicans gaining somewhere between 25 and 30 seats, again, very consistent with the historical average. The Senate is less clear. What you have going on in the Senate is 4 or 5 Senate races within the margin of error. The equity markets and the betting odds are making a bet that the undecideds are going to break to the Republicans, giving them more momentum, and that there's some built-in polling bias into the current polling that are going to lead to the Republicans being able to win the United States Senate. And so the consensus today is about a 65% odds of a full Republican sweep. That was not the case 3 weeks ago, when it was just at 35%. So it's a pretty big change that we're seeing in the consensus view. And of course, we're 2 weeks away from the election, so that could begin to change.
What could change that outlook?
We're focused on a few areas that can change the election between now and election day. And I want to caution, we're going to have record turnout in early voting. This is going to be one of the highest turnouts of a midterm election. So the longer these events take hold, the harder it will be for anything to really change the election environment. But number one, the president has announced that he's going to release 15 million barrels of oil at his strategic petroleum reserve. Politically, this makes sense. Gasoline prices are the single biggest factor in the voter behavior of the midterm elections. And so just by trying to keep the price of oil down will help try and minimize gasoline prices. We're also watching very closely if Donald Trump is going to rise to the head of the media news over the next couple of weeks. This is the 6-year anniversary of the FBI reopening up Hillary Clinton's emails right before the 2016 election. Regardless of how you feel about that action, it meaningfully changed the conversation into the final weeks of the election. And should you have an event like that happen with Donald Trump, it's more than enough for the media to be able to talk about that. We've been reading articles about how Trump has not handed in all his classified information, how the FBI have been watching him move documents around. And on Friday, we learned that the FBI believes that some of those documents are related to China and Iran. That doesn't mean that there's going to be an action against the former president in the next 2 weeks. It's just something that as consumers of media, read those types of articles. Somebody in the government wants us to know, and we're unaware and look out for some event like that.
What are the policy implications of the different midterm election scenarios?
There are really 3 election scenarios that can result from this election. The first is a Republican sweep. The second is a Republican House with a Democratic Senate. And the third is a Democratic sweep. Let's take each one of them individually. The lowest probability of these 3 events is a Democratic sweep. It's also the clearest of what the policy implications would be. President Biden would be able to claim a mandate, given that it is very rare for a president to gain seats in a midterm election. If he is able to overcome 100 years of history and gain seats, he will claim a mandate for a continuation of his existing policies. Where that will manifest itself the most is that the president is likely to go back for the remaining portions of his Build Back Better agenda. And in 3 key areas. The first is the child tax credit. The second is Medicaid expansion in states that have not expanded Medicaid. And the third is that making his renewable energy credits refundable, which means that he can deploy clean energy faster. Those 3 types of spending ideas would then have to be offset with tax increases, such as a corporate tax rate increase, a tax on U.S. multinationals, and a surtax on the wealthy. The president is also likely to double down on his opposition to fossil fuel infrastructure being expanded here in the United States, knowing that he can win elections with high gasoline prices. That is the lowest possible scenario of the 3 scenarios, but it is also the clearest in terms of what the policy implications would be. And we believe that financial markets will read that as somewhat inflationary. The second outcome is a Republican House and a Democratic Senate. Let's face it, that's going to bring us gridlock after January 3rd. If that election result ensues, it is very likely that what we will see from that is a very aggressive lame duck session of Congress in the month of November and December, immediately after the election. Some of the agenda items that are on tap for that lame duck agenda is an increase in defense spending that can range from 8 to 10%, the extension of expiring tax credits from Trump's tax reform, the possibility of a slim child tax credit, and also a significant change in retirement savings, not in a bad way, but increasing the required minimum distribution and maybe an expansion of 401ks and IRAs. Finally, it's very likely that as an amendment to that National Defense Authorization Act, you'll likely see the first outbound investment restrictions placed on U.S. companies. And more specifically, critical technologies that want to put supply chains in China will now be subject to national security review, very consistent with the idea that U.S. government policy is trying to get companies to come home and onshore their development rather than leave their supply chains hanging out due to national security concerns. Finally, if the Republicans sweep, we still expect some of those provisions to pass in the lame duck session of Congress, but the Republicans will have more leverage in a Republican House and a Republican Senate. Joe Biden will still be president. Joe Biden can still veto anything the Republicans put forward. As such, the Republicans are likely to use must-pass legislation, such as the budget, to place items on there like increasing the energy infrastructure, expanding the border security at the southern border, and then being able to increase the defense budget. We would anticipate some level of compromise between the two parties on those fronts. The big issue that will transcend all of these different scenarios is that the debt ceiling will have to be raised at some point in 2023. We're watching very closely to see if this is done in the lame duck session of Congress or if it has to be done in 2023. The more Republican seats gained in the midterm election, the more power that debt ceiling fight will have in 2023. So Republicans look to rein in government spending as the national debt continues to increase and interest costs begin to rise due to rising interest rates.
What are some of the bigger macroeconomic themes that you're watching outside of the elections?
Regardless of the election, we believe that the three frameworks for policy analysis have all been upended for a good period of time starting in 2022. The three that we look at are fiscal, monetary, and geopolitical. Obviously, the fiscal framework has been upended because we're in a rising interest rate environment. That means that the interest cost on the debt will continue to increase, and it will limit any future fiscal policy, both in terms of tax cuts and spending increases. Obviously, we're all very closely watching what's happening on monetary policy. This is the first time in 40 years the Federal Reserve has to get inflation out of the system. That means that the Fed has to continue to be vigilant in ensuring that inflation is coming out of the system before they can send the all clear signal. And finally, geopolitical. This is the first time since the Berlin Wall came down that the United States is beginning to look at a multipolar world. The threat of China and Russia together challenging the Western world has raised geopolitical risks. And so as a result, what we're starting to see is investors beginning to incorporate that risk into their portfolio decisions. U.S. government policy is beginning to change. We're paying the semiconductors to come back to the United States. Second, we're doing national security reviews on outbound investment. More recently, President Biden has limited computer chips and computer chip semiconductor equipment makers from being able to do business in China. This is going to lead to a multipolar world. Businesses and investors are going to have to choose where they make their investments and where they hold those investments as governments increasingly force these companies and investors to choose sides. Very much similar to a pre-Berlin Wall coming down in the 1980s. As a result, we anticipate that policy will lead to slightly higher inflation, slightly higher interest rates, and lower price to earnings ratio on stocks moving forward until these issues can be resolved. Thank you for your time today. We will obviously update you after the election with a full analysis. It is also possible that we're not going to know the full election results until the Pennsylvania ballots are counted and a possibility of a Georgia runoff that will in late December. If you have any questions between now and then, please contact your Baird financial advisor. And thank you for listening today.